Well, good morning, everyone. Welcome to our Thursday morning trading room. The end of August, day before the Labor Day long weekend. It's going to be interesting to see what kind of day we get tomorrow, going into the last holiday of the summer. Here we are with the NASDAQ again, my market of choice. And we've just opened up a couple of minutes ago. I was just taking a look here how our in-sync signals have worked. Yesterday, actually, we got tossed a knuckleball. That would have been the in-sync signal there. The rule of three worked out quite nicely, giving us a huge run to the upside yesterday. And today, again, we're starting here with a bullish signal as the market challenges the overnight highs. And here also on the Raptor, we're getting an early signal, a cloud crossover signal. This originates when the trend is just starting. Can I cover it to the hard edge? I can. Now, this is very, very early. I'm just demonstrating this trade for you. There's no reason to have to get into a trade right out of the gate, but here we go. Sometimes, if you can afford the risk, and you get a clean signal like this, all I'm trying to do is trying to gauge which way the market might be going today. We obviously are in an uptrend, and we may see the uptrend continue, especially if we can get through these overnight highs. But we're not even 5 minutes into the trading day yet. A lot of times I like to wait until the market gets a little bit more structure to it. Oh, I might have caught a break here. Okay, we're up at the highs of the morning. Now, this Raptor signal is the equivalent of the first Eagle signal of the day. I've had Raptor owners ask me, hey, Eric, how can I do that first Eagle signal that you keep talking about? Well, the Raptor is the same thing. The first in-sync signal that you find, you can get on board there. Oh, they're trying. They're looking back here, but they're trying. You see this big block of buying went through the market. That's what brought us in long. The sellers were trying to fight it back. I saw the Geiger counter keep pulling over here to the short side. You know, if you wanted, you could try to run it out a little further as well. Like I mentioned before, it seems when we get momentum, it tends to come early, although yesterday the momentum stayed all day, didn't it? Just a very nice, steady move higher. I'm at break even. I might give it a go. See if I get lucky enough here to ride this one out. My profit target was kissed, didn't fill. My profit objective, 59.60 half. They hit it right on the number and moved away from it. says, I just grabbed a quick $250 on that Falcon trend change signal. That's this one right here. He traded 2 contracts. Nicely done. That's exactly how you do it, Mark. Yeah, the Falcon's another one where you can look at that first in sync signal. One of the early DTS adopters years ago, Derek, that was always his favorite trade. He would take the first Falcon signal that developed right around the open. Yeah, nice start to the day is right, Mark. Obviously, I'm hoping that yesterday's bull trend will follow up today as well. So we're right into the primary resistance zone here at 59.62. That may have been a little an early reaction to that zone. If we follow through here, 59.79.5 is the next zone to consider. Yes, Mark makes a good point. Mark says, I hope so too, but 3 trend days in a row might be asking for too much. We'll see. And what Mark's referring to is the market's tendency to give us like a rally day, and that will be followed by a day or two of sideways nothingness. I guess I'd better get a little bit more aggressive with my stops. What do we think? If you're in this trade with me, if you wanted to be more aggressive on your stops, you could roll them just here below the primary resistance line, as it seems to be holding the market up pretty well at the moment. Elmer says, Eric, I had this number 1 a lot earlier in the yellow bars and then 2 number 3 signals. Yes, that's a little odd. So your number 1 cloud crossover produced around here. Or maybe around here. What I'll do is after this trade closes out, I'll refresh my screen. It could be my screen that's wrong. It's also the data. I'm running 24/5. Sometimes if you're running 24/7, just those couple extra hours of data will make your bars function a little bit differently. The important thing is that you still got the signal. But like I said, after this trade, I will refresh my screen and we'll see what's going on. Oh yeah, and then Mark says the tick size, of course. Currently I'm running an 8-tick chart. All the defaults. I haven't made any changes except to the number 2 setting in the Raptor parameters, and I'll go over that as well. Yes, Andrew, you're absolutely correct. He says it must be rosy in the USA for all these relentless moves. The stock market, you always need to be careful shorting the stock market. If you look at a really long-term chart, like a yearly chart or something, the stock market has been going up for the last 25 years. So when in doubt, buy. It's not to say there haven't been major corrections along the way, but they're always short-lived. Yeah, don't bet against the U.S. stock market for too long. Like I said, short-term moves, that's fine. You can make money to the short side. But if you're ever in doubt, always favor the buy signal. And this little trade's working out not too badly. All right, David's asking a good question here. David asks about the way the bars are painting. David asks, Eric, question on the price bars. What's the difference in a bar that's hollow and one that's solid in color? Both the same color, just hollow. A hollow bar, if you haven't seen this before, early candlestick charts would print a bullish bar. That's one where the close is above the open as a hollow bar. Now most programs paint them green. Early programs, when charts were printing black and white, would print black and hollow. Just a second, I'll build a chart here for you to show you. So this is how early charts would print when candlesticks were first introduced. So your black bars were bearish bars. The white bars, or the hollow bars, were bullish bars. The same thing is here on the Raptor. Hollow bars are bullish bars. Solid body bars are bearish bars. So this solid body bar, I know that the market opened here, rallied to the high up here, closed down here. And likewise, I know this hollow body bar opened here, sometime during the life of the bar, managed to trade all the way down here, and then ended up closing up here. Yes, okay, so David says, all right, well, okay, so a solid body bar is bearish, but what about the magenta color? The Raptor also paints the bar's color relative to the programming. The programming tries to figure out whether the overall bias of the market is bullish or bearish. So as you know, you can get a bearish bar in an uptrend. You can get several bearish bars in an uptrend. You can get full-on pullbacks in an uptrend. So long as the bars are blue, and some people don't like the Raptor colors, so they'll go back to the traditional green and red. But so long as the bars are painting blue, the Raptor's programming is saying, okay, the overall bias is bullish. When the Raptor bars start printing yellow, that's a sign of neutrality. That shows you that the market is balanced. Now, the yellow bars in the Raptor, not quite as problematic as the yellow bars in the Hawk. I tend to ignore yellow bars in the Hawk because they're too neutral. The market can go one way, it can go the other. The Raptor, it's just showing you a little bit more of a neutral state. Notice that all these yellow bars are printing more or less the same price level. The magenta bars show you a market that is switching its bias. So we've gone here from a bullish bias, we've gone neutral, and now we have a slightly more bearish bias. The bands themselves are still stacked in a bullish fashion. So I would still be looking more for a buying opportunity than a selling opportunity. I got to go back here. Unless we've got a rather extended band, a wider band, and we're producing a counter trend signal, and we're looking for it to move back to the hard edge, as it did here. Right? This is almost textbook, this counter trend signal. Let's see if I can find a downtrend. All right, well, here we have a downtrending market. You can see we're getting some hollow body bars, so there's a little bit of more bullishness coming into the market. But the overall bias at this point is bearish. Our bands are stacked bearish, our bar color is bearish, our signals are bearish. All right, looks like they reached back a little bit and tagged me. But a good start to the day all the same. Okay. Oh, a quick little reverse in there. Sellers are showing up. I think I'm going to avoid shorting unless I get a very good test of the extreme, a really good retest of the high. Not saying the market can't head a little bit lower today. As Mark pointed out, we've had some very strong rally days so far. All right, we're going to come out of here with a possible buy signal. You can see the hawk already turning bearish. It may actually produce a first micro macro cross lower. Falcon also starting to turn over, working a possible trend change signal there. The eagle remaining bullish. And the raptor here. Visually, this would be a little bit of a judgment call, whether you want to treat this as a hard edge bounce and the ensuing buy signal that may follow. Or if you want to let it go for a proper hard edge bounce, that would be the number 3 signal. Like I said, a little bit of a judgment call, whether you deem that to be close enough. Or if you want to hold out. Hold out for a stronger signal. Oh, are they going to give me a signal? Oh, there it is. All right, so let's see how this works out now. So here is, technically, it could be treated as a number 3 signal. When in doubt, a lot of times it's a good idea to take advantage of a second push opportunity. So here, the second push means the signal has engaged. You see how the market has retreated? So I currently know the limit of this bar. It's only an extra tick or 2 to try to get entry on some renewed momentum. Now this is a riskier trade, folks. So I'm showing it to you here. It may not have the desired result. I may bring my break even in a little bit. You see my break even is right at the high of the morning. Maybe I'll bring it in a couple of ticks. So we saw a little bit of an early push, losing a little bit of upside momentum maybe, but if the market chooses to reverse here, it will come back and it will intersect the hard edge. That second signal would be a little higher probability. This one's a little more up in the air, but we'll see. Obviously, if I can get up here closer to the highs, 59.69, 59.70, that would help. Come on, you can do it. So close to that break even. If it rebounds a couple of ticks, I will take the break even. All right, I'm going to force it to break even now. There we go. That's all they get. All right. What I'm looking at here is a possible test of the extreme. And that made me a little bit nervous, so I chose to bring my stops up. This is that double top I was talking about. If we get a sell signal here now, we will have a proper number 2 signal. We'll see here in a moment whether that was premature. Oh, there it is. There we go. So I just punched in with a sell signal, and stops should go above the high. We'll give them a little bit of wiggle room there. Target the hard edge of the trading band. this really kind of cheeky on my part trying to short this market. But looking for a short-term move back to the hard edge. All right, so we just broke the high of the morning. This is, again, the trouble trying to do a counter trend trade. Always difficult. And did I get lucky here? Probably not. I have a feeling I could get spanked here in a moment. I need one more breakdown. One more push lower. Oh yeah, Ken says oil's up quite a bit today, and right you are. A little bit of a rally up out of the open, North American Open, right around here somewhere. A few minutes later, got a nice buy signal on that cloud crossover. of a reaction, maybe some bearish profit taking. Ooh, I really need to see this high hold and at least a couple bars form in my favor, but I don't think I'm going to get it. I think I'm going to get tagged here. It's what I get for being cute, trying to outsmart the market. Shows you who gets outsmarted. Well, the highs continuing to hold. Might get lucky here and actually see the market push a little lower. No, get away from there. You know, I'd probably be all right if I rolled my stop here to 75, but I'm not going to do that. Okay, well, I caught a little bit of a break. We're coming back now with yet another number two signal. After the highs seem to be holding, you see we're getting the pre-signal warning, the band printing in the back. And here come the buyers one more time. It's not what I'm wanting to see. My concern is there's going to be one more bullish rally before the market turns over. I would obviously much rather see the market fall off from here. Rick asks, does this look like a 1-2-3 pattern after an ABC pattern? Maybe. The 1-2-3 is your typical pattern, that topping pattern. You know, we call it, here, I'll do it on a different chart. Oh, there we go. I don't need to worry about it. We call it a test of the extreme. It's also called a 1-2-3. It's also called an M or W pattern. M on the upside, W on the bottom. Also called an ABC correction at times. The concept is the same. It's potentially showing you a market that can no longer continue its trend. Here we have an uptrend. Here we have a downtrend. The market tries to resume the uptrend and fails, starts heading lower. Tries to resume the downtrend, fails, starts to head higher. Oops. So, you know, as I mentioned earlier, when in doubt, buy. It's always more difficult to try to sell into an uptrend. There will be a reversal. It's just where and when. And reversals, of course, markets don't turn on a dime. There's usually going to be some structure to it. A lot of sideways trading will often precede a reversal. And that's what we're looking at right now, a lot of sideways trading. That trade might have worked well if like I said, if I had my stop here above 59.75. I might have been able to hold on long enough. I knew I was a little bit tight being that close to the high. it looks like they would have tagged me even at 75, so just as well. Elmer says, again here, I had no signal, one yellow bar and one blue. All right, well, my data series is 8 ticks and default 24/5. I know you said you're running 24/5 as well. Oh, Rick says go to webinar kicked about. All I was saying, Rick was the one who asked about the 1-2-3 pattern after an ABC correction. So I guess the way Rick is looking at it is like, here's your A, your B, your C. It's also like a 1-2-3 pattern. A breakout above the number 2 point would initiate a buy. Mike Filigaro used to like to follow the waves on a mean Renko chart. I don't pay that much attention to them until I get a test of the extreme. And that's what I was talking about, the topping pattern, sometimes referred to as an M or a 1-2-3 top, or the bottoming pattern, sometimes referred to as a W or a 1-2-3 bottom. These will always precede the best counter trend trades. There should be a break of the trend line. You know, if you can draw a trend line, there should be a significant break of the trend line. And then this topping pattern, and you can see we didn't really have that yet. Trend line's kind of printing like this. What I would like to see is a good break of the trend line, a retest, and then a sell signal. That would be a much more predictable number 2 signal, a counter trend signal. But I paid my nickels, I took my chances. Didn't work out, but I will try to get it on the next one. Okay, we'll put that back on the shelf for now. Not really much going on. At the moment. We've come back with another macro pullback here in the hawk. What's giving me a little bit of concern is, well, the apparent lack of momentum, upside momentum, this huge selling spike that just went through. We're about an hour into the day, so this is when reversals tend to happen. If there has been a dominant trend, sometimes we'll see the market try to reset. Rick asking, do you have a YouTube link that explains in detail how to use a trade management system that comes with the 2.0 system? If you go to the Indicator Warehouse YouTube channel, and uno momento, I'll find that for you. So if you go to YouTube and you search Indicator Warehouse, you'll come to the channel and you can subscribe to it. So you subscribe and you'll get all the postings. There are a lot of Trade Manager videos, but I will also go over the Trade Manager for you right now. Now, an easy way to become familiar with the Trade Manager is just to play with it. Just get familiar, go into sim mode, see what all the buttons do. That's a very easy way to become comfortable with it. The Trade Manager has two components to it. This bottom portion is what we tend to refer to as the risk management portion, and the center portion is the profit manager portion. The risk management portion will control things like your risk exposure, which is this value right here. This is the percentage of your capital that you are going to place at risk for each trade. If you click on the risk percent button, it will also switch to manual mode and it will default to this quantity here. So you can also control how many contracts you want to trade. Let's say the market's acting kind of funny, or you just don't have a feel for things and you don't want to trade more than a single contract, then go into manual mode. Or let's say you want to trade 6 contracts every time, then go into manual mode. You can also choose your order of preference. By default, it will be the stop. If you're trading a very active market and the market accepts it, you can use a stop limit order. You can also use a market order, which will, of course, duplicate what you do up here, and also limit orders. You can also preset profit targets. T1%, T2%, T3%, R% stands for target 1, target 2, target 3, and the runner. You can see currently I have set up to take half my profit at target 1, which is preset at 20 ticks. And I can preset as many as 3 targets, and whatever is left over will default to the runner position. Getting a little bit of a trend change signal here now, or a late number 2. We'll see if we get a little bit of bounce. The center portion here, your profit manager portion, this is where you have your stop strategies, and there are 16 stop strategies to choose from, and as I'm sure you've already realized, you can customize them. So you can change the values to make them more aggressive or less aggressive, whatever it is you choose. And you can play with all the different ones. You can change your profit strategies while you are in a trade. But unless this trail indicator tab is enabled, the profit manager will not trail your stops automatically. That's very important to remember. You can preview stop strategies. So let's say we're using the ATR strategy and I'm wondering what parabolics would look like. So I can preview the parabolics. And hopefully you can make out those orange hash marks. They will show you how the parabolic strategy would display. If you would prefer that, just click accept, and now you have the parabolics working for you. The bid-ask histogram is just there to show you the market flow, the order flow. It's also helpful for making sure the data is on. Sometimes I've been trading and it's like, wow, this has taken a long time to unfold. It's because my data disconnected and I didn't realize it. Flat and entry just shows you if you have a current position. Right now we don't. The break even button forces your trade to break even at currently +1 tick, but you can capture as many ticks as you want. And people don't know this, but you can go negative break even as well. So let's say you have a break even trigger, you want the market to hit that trigger, but you don't want to be right at break even, you want to be break even -4 ticks. Well, you can do that too. By default, it's set to break even +1 tick. The idea is that at least you recover enough to cover commissions. The OCO button is for one cancels other orders. It's when the market seems to be in a sideways trading range. Like let's say you deem this to be a sideways range and you want to bracket it. You don't use this down here to set your orders. You will right click and enter your buy order, right click, enter your sell order. Now these orders are live. You don't need to hit the submit button. So you can place them away and then you can roll them in. Now when you're running an OCO order, it's advisable to have your stops enabled. If you don't, sometimes the market will, the OCO function will cancel the order once it's filled. The buy, sell, close buttons, those are pretty self-explanatory. You're going to buy market, sell market, close. The account shows your account number up here. The panic exit, excuse me. The panic exit button is exactly what the name suggests. It will flatten all trades associated with this account. If I hit the panic exit, it will, if I have, say, 3 charts linked to this account, it will close all orders with that account. It's essentially a shortcut to your flatten everything tab. And it's in case of emergencies, in case the world comes unstuck and you need out of your trades, you hit that button right there. Okay, so I'm going to leave this OCO order in play. We're also getting a teeny tiny number 2 signal. See, there's a little bit of a test of the extreme, not a major one, just a little one. And we might see the market try to recover to the hard edge, maybe. And that's it. That's your trade manager. And like I say, the best way to get used to it is just to play with it a little bit. It's not a difficult tool to use. So now, if I take this morning's trading, I think I finally got my trend line break. So there's my trend line break. Look for a retest now of the high and a failure, and that will give me my number 2 signal. And when you go to play with it, Rick, if there's something you don't understand, if it seems to be doing something quirky, just email me or bring it up if you happen to be in the trading room next, and we'll work you through it. Oops. Clicked on the wrong thing there. Oh my goodness, what a balanced market we have here at the moment. They haven't realized yet that they're ready to head lower. Still watching, still waiting. All right, so here we're looking at something resembling that number 2 signal that we were holding out for. We'll see if we get it. Well, there's the number 2 signal. It's printed. I could bring my entry order up here a little bit. It hasn't printed the number 2 signal itself because it's just taken a little bit too long to unfold, to unwind, and it's not quite meeting the Raptor parameters, but it is still a number 2 signal. Target, of course, the hard edge. All right, so actually it looks like it did print the number 2 signal. Everything came together. Well, they're taking their time here. Well, they're thinking about it. Rick asked, do the red lines represent a printed number regardless if it prints or not, as well as the green? It shows you the ones that are kind of grayed out a little bit, shows you a signal that tried to print but didn't. The ones that are a little bit more opaque show you signals that actually completed. So you see here was the number 1 signal that completed. Here's the number 2 signal. Actually, all those followed through. It's just this morning we had a signal that attempted to print, and I don't know how well you can see that on your monitor. But there is a number 2 signal that attempted to print that did not actually engage. I might hold my stops just above the swing high here for, there we go. Just to give them a little room here, because a retest of the high is possible. is asking, maybe he's got the wrong sensitivity. He says, I printed a number 2 signal here next to the yellow bar. Yeah, I can see that. A little bit of a retest. I'm not going to open up this one here because I've got this trade on the go, but let's take a look here at the Raptor on crude oil. And, oh yes, indicators. Now, there is no right or wrong when it comes to the sensitivity. The reason the Raptor version 2, we've opened up the programming so that you can make changes to it. A lot of DTS owners wanted to be able to customize their system more, and of course DPS is a locked system. So we opened up some parameters here on the Raptor, and one of them is the signal parameter SE. That stands for soft edge. That's your number 2 signal. By default, it is 1.01. I find 1.25 works pretty well. The higher this value, the more signals you're going to get. The higher the value, the less discriminating the programming will be when it comes to finding a countertrend signal. So if yours is set higher than 1.25, then yes, you may produce an earlier signal. That early signal would actually be advantageous because I was looking for an earlier reversal once we broke that trend line. Now we're going to get that little bit of a retest and hopefully one more push lower. Maybe. Sometimes I should take my own advice and just stick to the long side. All right, we're getting a little bit of traction now to the short side. My stops have rolled a little. I may hold them back where they were. Just disable my stop rolling for the moment. Target remains the hard edge of the trading band. Not yet. They're still trying. For a second there, I thought they were actually going to follow through. Oh, the Geiger counter is still stuck here on the buy side. They're trying. Big push lower. Oh, the action is almost too much to bear today. You think it's slow now? Wait until tomorrow. Things are likely to get really, really quiet tomorrow. Oh my goodness, I thought they were at least going to get me to the hard edge. And that's probably how it's going to play out here as the market heads into the lunch hour. Way to go, Peter. I think we're going to finish here the morning with Peter's comment. Peter says, "Hi, Eric. Seems the Raptor is much more flexible as of yesterday. One trade up $80, second trade left it on the system with an OCO and made $700 while playing golf. Isn't that a great way to spend the day?" So far, I've done 4 trades this week, and I'm up $2,000. Way to go, Peter. One trade today, up $60, one and done for today. And you know what? That's probably prudent because, as I mentioned earlier, of course, the holiday weekend just around the corner, and things likely to get really, really soft here. I'm going to bring my break even up. Next move lower, I'll either see the market follow through or take that break even stop out. All right, gang. I will see you tomorrow. Have yourselves a wonderful day. We'll talk to you then. Bye for now.